Let's talk about the SOC reports now. Okay, yeah. So first of all, what do we mean by SOC reports? The SOC reports, they refer to the System and Organization Controls Report. SOC reports are required under the attestation standard of the American Institute of Certified Public Accountants. Under the AICPA, it is required, okay? SOC reports are audit reports covering service organizations controls. So they are basically for service organizations. They're meant for service organizations control. And we have two types of services actually here. So the SOC reports cover the organizations that provide financial services like payroll services, such as paychecks and ADP, or it also applies to the organizations that provide non-financial services, like storing, processing, or protecting data. And that's basically, for example, like the cloud service providers. So if you're storing your information within a cloud service provider, as a customer, you have the right to ask them to provide you with their SOC report in order to make sure that your data will be safe and that they have the proper controls to maintain and keep your information. The SOC report is issued by the service auditor. And the service auditor here, we mean by it the practitioner who reports on controls of a service organization. Now let's talk a little bit about the parties who are involved in the SOC reports and how it works, because here we have more than one party. So we have first the firm A, which is the user entity. We call it the user entity. And the user entity is the firm that uses the service organization and is subject to audit by the user auditor. Okay, so any firm, it can be any firm, it can be a university, a hospital, any firm that is using a service organization. So for example, if we have firm A is outsourcing its services to ADP, which is a service organization here. ADP is performing the payroll services for firm A. So firm A is outsourcing its payroll services. It's not doing it internally. It gives us to ADP to process its payroll, right? The service organization here, which is ADP, we mean by a service organization is the firm that offers services to a user entity relevant to its internal control over financial reporting. So ADP here is working on the payroll of firm A. Any mistake that ADP does in the payroll means that there's it will cause a problem in the financial reports of firm A, right? So we want the internal controls for ADP to be strong in order to ensure that the payroll information of firm A, which will be processed by ADP, we want to ensure that everything is going fine, they have the proper controls, because this will impact firm A's financials if the controls were weak in ADP and they made mistakes, right? Now we have the user auditor. What does the user auditor do? The user auditor performs the regular annual audit services of firm A. He's the normal external auditor of firm A. And he's the one who issues the audit reports on the financial statements of firm A. Sometimes we have also a sub-service organization, which offers services to the service organization relating to the user entity. So here ADP, for example, which performs the payroll services for firm A, ADP may have another organization that's offering it some services to help it in processing the payroll. Now, the service auditor, it's very important to differentiate between a user auditor and a service auditor. Here, it may be a bit tricky because we have two auditors involved. So it's very important to differentiate between a user auditor and a service auditor. The service auditor is the auditor who performs audit of the controls of the service organization. So the user auditor audits the user entity, which is firm A here, does the normal annual audits. However, the service auditor will come and audit ADP here, which is the service organization, which is the organization that is performing the payroll services for its clients, right? So the service auditor is the practitioner who reports on the controls of a service organization. So the service auditor is going to go audit ADP, and then he's going to issue a report on the controls of ADP, how is its controls are, right? Now the service auditor, we have two types of reports that are issued by the service auditor. We have the SOC 1 reports, and the SOC 1 reports, they apply if the service organization offers financial services. So here in our case, ADP is offering financial services. It's handling the payroll services of its clients. So its report is going to be SOC 1 report, the SOC 1 report. So SOC 1 report is needed from the service auditor to satisfy who wants to see this report. The user auditor wants to see it and wants to be satisfied, because certain controls that are impacting the user entity's financial statements are done by the service organization, right? The user auditor will not go and audit the service organization. The user auditor will ask for the SOC 1 report that is issued by the service auditor and depend and rely on it and rely that the internal controls of this service organization are correct in order to be able to issue his report for the firm. Now, the second type of report that a service auditor can issue is the SOC 2 report. The SOC 2 report applies if the service organization offers non-financial services, like data storage and protection. For example, the cloud service providers and the ones that store the data and protect it, those do not provide financial services, but they are subject to the SOC audits, and they must have SOC 2 reports because they are handling and they are keeping information for their clients, right? So for us as users, when we put our data and our information, especially when it's something sensitive like hospitals' information, when they go and they store it with the cloud service providers, they want to be sure and they want to be satisfied that this service provider, that this cloud-based service provider has the proper controls to maintain and store this data in a reliable manner and that everything is fine. So that's why the service auditor must issue a SOC 2 report for the service organizations that offer also non-financial services like data storage and protection. The SOC 2 reports, they focus on a service organization's system controls that are relevant to the security. We want to make sure that the cloud-based service provider, for example, has the proper security controls, availability, or processing integrity of the system. We want to make sure that everything is fine. Our information, our data, when we store it with a cloud-based provider, we want it to be secured, we want it to be available, and we want to be integrity in storing this information, and the confidentiality and the privacy. We want all those to exist in the systems and the controls of the service organization, right? That is providing the cloud services, for example. And this is done by the service auditor who goes and audits and performs the internal controls for them, the internal controls testing, in order to make sure that they have those controls. Now, why do we need the SOC reports? Again, the AICPA added the SOC attestation engagement requirements in order to give confidence and assurance about the service organization's internal controls. We want to be confident that they have proper internal controls because they are considered outsourced user entity controls, right? They are doing some services for the user entities. The service organizations, they hire a CPA firm to perform an engagement on their system processes and controls and issue the report they can provide to their to the user auditor, the client's auditor, in order to give them confidence. As we said, the user auditor is not going to go and perform the audit procedures on those service organizations. He's going to rely on the SOC reports issued by the service auditor in order to issue his annual audit report for the user organizations. Now, again, the service organizations get the SOC audits, they are done annually. and they show that their systems and controls are suitably designed. So the SOC reports show that the controls and systems for those service organizations are suitably designed. And based on the type of the engagement, because we have type 1 and type 2 reports, they may be required to also report on the operating effectiveness of the internal controls of those organizations. Now, as we said, the service auditor issues either SOC1 reports, which apply to service organizations that offer financial services like payroll, or SOC2 reports. And this applies if the service organization offers non-financial services like data storage. Now we have two types of SOC1 report. It can be either type 1 report, which reports at a point in time. It is a point in time audit, okay? Or type 2 report, which covers a period of time. Also, the SOC2 reports, they can be type 1 or type 2 reports. Now, the type 1 report, under the type 1 report, the auditor reports on the management description of the service organization's system at a point in time, and the suitability of control design as of. So the auditor is going to put that in his opinion, that the control design is suitable as of blah, blah, blah. It's at a point in time. However, the type 2 report, it includes the management description of the system. So the auditor is going to report on the management description of the service organization systems, suitability of control design, plus under type 2 reports, the service auditor is required to test the operating effectiveness of the internal controls of the service organizations for a period of time. So this is the difference between type 1 and type 2 reports. Type 2 has an additional element. The auditor here is required to perform tests of controls here and report on the operating effectiveness over a period of time for those service organizations. Management specifies that the control objectives, management usually specifies the control objectives to be tested, and this must cover a reporting period of at least 6 months. This is at least should be the reporting period. Now, for both SOC1 and SOC2 reports, distribution usually is restricted to the service organization or user entities and user auditors. So for those two types, the distribution goes either to the service organization, user entities, or user auditors. Now for the SOC2 specifically, reports can also be distributed to regulators and potential clients. So you as a client, for example, if you are saving your information using a cloud-based service, putting important information and saving it using the services of a cloud-based service organization, as a client, you have the right to ask for the SOC2 report in order to ensure that this cloud service provider has the proper controls to keep your information in confidentiality, privacy, and availability, and everything, integrity. So this is the basic difference between the SOC1 and SOC2 reports. Again, for example, let's take one example on SOC1 reports. So assume company A outsourced its payroll services to ADP. ADP's internal controls will absolutely impact the correctness of the payroll expenses and tax liabilities computed and recorded for company A, which is the user organization, right? Now, if ADP's controls fail, company A's payroll will be incorrectly computed and therefore will cause a material misstatement in its financial reporting, right? Company A's auditor, who is the user auditor, will use ADP's SOC1 report as part of their audit over company A's internal control. So the user auditor is going to go ask for the SOC1 reports. He's not going to go and perform the audit over the service organization, but he's going to ask for the SOC1 report for company A here, in order to ensure that company A's internal control is, in order to ensure that the service organization's controls are proper and everything is fine. And this is going to be part of issuing, in order to be able to issue the audit report and issue an opinion on company A's internal control, right? And issue the financial statements. So that's why ADP, the service organization, must hire an auditor who is the service auditor to audit its internal controls and issue an SOC1 report. ADP's SOC1 report will also be used by potential investors in ADP as well. So this is an example on an SOC1 report. Now, an example on SOC2 report is, for example, if we have a cloud-based service firm, a cloud-based service firm must submit a SOC2 report. So assuming we have University A uses cloud-based services offered by XZ company to store its academic data, for example. So XY's internal controls will absolutely impact the privacy and security of University A's data, which is the user organization. If XY's controls, which is the service organization's controls, are not operating effectively, University A may lose its data and information, or its data may be accessed by unauthorized parties. So that's why University A must request a SOC2 report from XY company before trusting them to store their information. So this is an example on SOC1 and SOC2 reports, and the difference between both of them. Remember, SOC1 reports apply to service organizations that perform financial services, while SOC2 reports apply to the service providers that perform non-financial services, such as the services of storing, processing, and protecting clients' information. And again, we already talked about them. I usually love to make summaries of the differences between both. So both of them, as we said, the SOC1 and SOC2, SOC1 applies to service organizations whose controls impact their user entities' financial reporting, as we said, like the payroll service providers, while SOC2 reports apply to service organizations whose controls impact their user entities' operations and compliance, like data storage and cloud service providers. SOC1 reports aim to give the auditor of a user entity evidence about controls at a service organization that relate to a user entity's internal control over financial reporting. However, an SOC2 report aims to give service organizations, management, user entities, and others a report about a service organization's system controls. Okay, we're not talking about the financial reporting, we're talking most about the system controls in the SOC2 reports, which are relevant to the security, availability, confidentiality, and privacy of those systems. So this is the basic difference between an SOC1 report and an SOC2 report. SOC1, as we said, it gives evidence about controls at a service organization that relate to the internal control over financial reporting, while SOC2 report, they give service organizations and management and users a report about a service organization system controls. So they report about the system controls relevant to the system's security, availability, confidentiality, and privacy. The distribution in SOC1 reports, it is restricted to the service organization, user entity, and user auditor, while in the SOC2 report, distribution is restricted to the service organization, user entities, business partners if there are partners, regulators, and clients. So the clients here can also get an SOC2 report. Both of them, they are similar in that both of them, they can be either type 1 or type 2 reports. And the service organization auditor, the service auditor, gives an opinion on the fairness of the description of the system that was designed and implemented at a specific date, if it was type 1. If it's type 2, the auditor is going to give an opinion on the fairness of the description of the system that was designed and implemented over a period of time. So this is a difference between the type 1 and type 2 reports. And also the auditor is going to give an opinion on the controls, that the controls were suitably designed at a specific date, or if it's type 2 at a period over a period of time. And only if it's a type 2 SOC1 report, the auditor is going to give an opinion on the effectiveness of the internal controls by performing tests of controls. Okay, so he's going to give an opinion that the controls tested operated effectively during a period of time. And tests of controls must be done if it's a type 2 report. And this is similar to the SOC2 reports, the same thing. So it's the SOC or SOC1 or SOC2, both of them can be either type 1 or type 2 reports. And the auditor gives the same opinions, but the nature of the service organization is the one who determines what is the type of report that's going to be issued. Is it a service organization that's performing financial services, or a service organization that is performing non-financial services like data storage and keeping the data and processing the data for clients?